Hi, everybody. This is Gary Dean, and this is our nightly video report for Thursday, October 13th, 2016. So the markets continue to make sense, and that's a good thing. So what I mean by that is, if you look at the morning notes, what I was saying was you don't want to be pressing the short side because we've had a big drop. B, we're at some support levels, and whenever we've had that, whoever holds for the big hit gets ends up watching a huge amount of profits that that get washed away. So the thing is this: can we head lower? Absolutely, we can. But the thing is that it's getting risky now. And me personally, I'd rather be waiting for possibly a long setup unless we come up and say find some resistance up in this area and we can get a quick pullback. But right here, the big move, it happened. So yes, we could head lower, we could go down a lot still. I'm going to let the market, dictate that part of it. But it's just, we're pretty oversold right here. We had some bullish divergences on the momentum indicator here. So it's not an area where you want to press the short side. And that's what I was really, really, really trying to get through in the morning notes was, the market will let us know if it's going to go a lot lower or a little lower, but this is not the time to be jumping on the short wagon. This is when people jump on the short wagon here, they get, they usually get slaughtered because we get these kind of moves. So, holding on to some for, say, the home run is fine, but taking some off when we get here, and just holding on to a small piece of the short side in case we head up and, say, taking out some resistance levels, then you just get stopped out of it, and we switch hats and switch sides and start looking on the long side. So it's one of those things that the market has not changed as far as if you really, really are looking to swing for the fences or hit the home runs, you're ending up in the same spot. Even though today was down, it was down more, but from the lows, I mean, we went from 21 to 15 all the way up to 21.37. That's a brutal, brutal place to be short and watch that go up. And again, that's why I was saying don't press the short side, not down here. If anything, just miss it. That didn't mean I definitely didn't say to buy to go long. I said I would I'd wait on that. So if it goes down and you miss it, so be it. I mean, we've had a big run right now, so now you start concentrating on where could we possibly make a low. So we found support here. There's still room to go to get into the oversold level. So if the bears can take this low out, most likely they're going to come down 2105, but more likely down to this 2068 level. Now, if they head up, what you want to do, keep an eye on that 2165. This is going to be where sellers step in. So, and that's also where the top of the wedge is. So you can see right in this area here, if they decide in the next day or two to come, to rally it up, say tomorrow, up to these levels, then you know what? You turn around, you short it, and you wait for it to at least come down and test the lows. So we're at a thing where the move happened. It was a great trade, and this is where you just start scaling out and managing positions. So right now, the first thing that the bulls have to do is get up and push it through this 2144. If they do that, then you're going to see a reaction trade to the 2149 and then possibly even up to this 2154. If they get above that, then you can see now we have the 2165 as resistance. So they dug themselves a pretty good hole, and that's why I'm not really too anxious to be jumping on the long side. I want to see them come down, test the lows or break them and come down and test the lows again before going up. And like I said, you take it, when we get to that time period where you want to look long, then you take a piece and put a stop underneath it, and you may take a few tries to do that. But, what happens is when you get it, then you get your 30, 40 point moves, and that's really what we were looking for. So we have bullish divergences. We're at some support. this makes sense for a low, but we may come down and test it again, or even break it some. We have to, I'm going to wait and see. I'm not that smart to predict which way it's going to go. Now, if it heads up, then we want to look up here and possibly take another short scalp with some stops being right above it. But again, if it comes up, I would rather see it come down and just kind of relax for the next day or two, and then look and see where it makes a bottom and go long. I think that's the safer trade right now. So we can see we actually went through the secondary support level here, but we made it at right below, just a little bit below where this was, and then they pop back up again. And we've seen that before, where they break below it, make a big wick, and then rally it up, and it's like they just squeezed out all the weak longs, made them cover, and then shoot it back up again. So that is, you can see here we had the bullish divergences on the 15-minute chart. You can see the gap was closed, right? I'm not sure if it was closed. Here's the gap, right? It almost closed, but that's another reason why you want to be a little bit careful. Shorting is, you have this gap right here at 21.39. You have this gap here at 21.63. So we have a lot of gaps that are above that haven't been filled, and most likely they're going to get filled. So that's why I would rather let this play out right now, let the dust settle, and maybe take some quick trades. So this would the trade that that we got short on, this was a swing trade. The other ones, they may be quick. They may be a day or two, and I'll let you know what I see. And then, until we make that bottom, and then when we make the bottom, then it's going to be a swing trade to the upside. So that's really my game plan right now. Things are going, they're making sense, which is a good thing. So with that, let's see what plays out tomorrow. Have a great night, and I'll talk to you guys in the morning.